right, welcome to another episode from the Chart Reader. So we will be doing an index review here. I was asked to look at SPY and QQQ instead of the actual indices, so I'll do that for today's. I was going to say today's call. I've been in so many meetings today. I will do that for today's video here. Again, when we look at SPY, it's the ETF of the S&P 500. The chart is identical. You can see it mirror of it. It's just, a $5,000 share versus like a 500, right? So it makes sense to me why people do look at this one, right? Same thing with QQQ. When we look at QQQ, this is a $400 share thing. It's a lot easier for people to look at that as opposed to NASDAQ, which is significantly higher, right? 15,000. But hey, you can see it. The charts are identical, right? So the moving averages are the same. You can kind of see that the RSIs and MACDs are roughly the same as well, right? So it really doesn't do much of a difference to look at the ETFs or the actual indices. But yeah, it was a crazy Monday today for sure, right? And I'm going to talk about this candle. I'm also going to be talking about Powell's comments from last week. So disclaimer, I like Powell. I really do. I'm not an economist. I don't really know much about like political stuff and like things like that, right? I like Jerome Powell because I feel he gives us as good of guidance as he legally can. You know what I mean? Like, I think he's loud when he needs to be. And as a trader, I like that, right? Like, do I know if he's better or worse than Janet Yellen or anyone before her? Dude, I have no idea, right? I just know when I say I like Powell, it is because I can read the guy. You know what I mean? There are people on the Discord that completely disagree with my comment. I know one of the mods doesn't like him. A Golden Onion doesn't like him. So, hey, if you don't like Powell, believe me, feel free to disagree, right? But I think he did what he always does. I think he gave us some loud guidance last week. And I think that's what's been dictating what's going on here, right? There's obviously some technicals happening, right? And I'm going to talk about that 20 moving average, right? But yeah, I think his words really did a lot last week. So I will talk about that for sure. And then, like I just mentioned, there's a lot of technical stuff going on, all right? Normally on my videos, we focus daily and weekly. I'm focusing a lot more on weekly, maybe actually even a little bit more on monthly. All right, so I'll flash the weekly and the monthly a bit more. And honestly, look, daily is important. Daily is important. But with the indices, even with these ETF equivalents, right, you want to take a little bit more of a long-term view. I like doing the daily on these when we're in a good big uptrend. All I got to do is look at the daily, believe we're going to keep going up, and then I'm happy from there. I'm kind of doing the opposite here, right? I'm looking at this. It makes me think I'm going down, and I got to use the longer timelines to kind of guess when that might change, right? So last thing, just in case you only watch the opening thoughts and nothing else, look, I am looking at the inverses very, very heavily. All right. For me, I'm again, I'm not a day trader, right? I like to swing trade. That is what I do, right? It is a lot harder to hold things overnight. The only things that I feel comfortable with are kind of the inverse tickers, right? And I'll talk about that a bit more, but you can see QQQ has been going down, 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 right? It did this thing too right here, right? When you look at sqqq, it's the exact opposite. It obviously had a real bad drop when that one went back up, but this is starting to curve back up where the other one's starting to curve back down, right? SPY, you can see, is obviously the exact same thing. SPXS was one I mentioned today. You can see this is a 3x inverse. Again, this one's starting to climb up, and it also obviously had that same fall down, right? So that is just two of many, right? TSLQ was another one we talked about. This one's Tesla specific. Inverses are kind of my main focus right now until, I see something a little more definitive that makes me say the market is good. Believe me, I sincerely believe we're going to recover. We always do. The question just is when. And hey, I don't know when, but I think I can tell when it's raining, when it's going to be a little bit cloudy, and when it's sunny, right? We're definitely not in sunny. We're definitely somewhere between it's starting to rain and maybe it's going to rain a little worse, right? You know what I mean? So we're here just checking the weather and attacking accordingly, right? So Before we do go any further, though, and I give you more of my thoughts and opinions, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly, probably the monthly a little bit more than normal, but we will be using our time frames there. Not that many up here, but there's plenty of lower support and resistance lines that I do draw manually myself. And then when we are done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, really quickly, if you can, please subscribe to this channel. Share this video online with your friends. Comment good or bad if you disagree. Look, anything you can do helps so much with these YouTube algorithms. But for real, just being here, giving me your time, oh, I'm so grateful for it, all right? So, real quick, let me actually do something. I'm going to pause this for a second and bring up a new window. 1 second, sorry. Okay, cool. We are back and I am now at the fireplace. So I like to do parts of my video here. Look, what I'm about to tell you has nothing to do with technicals. And again, I always stress, I have no idea about economics, global impacts, political stuff. I really am just a guy that knows some technicals pretty all right. These are just my thoughts right here. And hey, we're going to come to the fireplace and have a little bit of a chat here, right? So I'm going to start by talking about Powell, and then I'll start talking about, some overall thoughts, and then we'll go into the technicals, all right? So number one, I'm going to say it again. I personally like Powell. I really do. I think there are a lot that don't. And honestly, I'm not even here trying to change any minds. And really, when I say I like him, it has less to do with, his policies and what he's done and this and that. It really is a lot more of a selfish answer. I like him because I think I can read him pretty well. And being able to read the person that goes on stage during the FOMC and really the one person that the market stops for, listens to, and goes accordingly from there, that's an important thing to be able to read, all right? And I sincerely believe that Jerome Powell is appropriately loud. All right. There's obviously not a lot of things that the guy can say. He obviously needs to say a lot of non-definitive stuff just in case they need to pivot, right? Because hey, I'm not even talking about Trump stuff right now. Like any moment, anything can happen, and like that's going to cause some ripple effects anywhere, right? If whatever company goes under, there's so many different things that could happen, right? So the guy really can't be that loud about things, but I genuinely believe he's loud enough. And on the last few FMOC calls, and they've been good, right? They at least haven't been bad. Market really hasn't hated any of the last things that Powell has said. Powell has continued to say, reiterate, and really re-strengthen in a lot of ways. He keeps saying, look, everything's okay. We're in no rush to do anything. We're just waiting for the data, and we're going to go accordingly. That's probably been 3 hours of the last FMOC calls wrapped up in like 3 sentences. You know what I mean? We're in a good position. We're okay to wait. We just need to see the data. That's been the going theme, all right? What he said last week, and what it was, I watched it actually. There is a YouTube video that you can go watch the whole live thing. It was a Chicago bank meeting. And again, I'm kind of saying that in a pretty dumb way, I'm sure, because again, I'm not an economist, whatever the word is, right? Like, I don't actually know what the thing was, but it was a lot of really important banking people from Chicago, all right? I imagine one of the federal banks is there, right? So when he went on stage, it was really a couple seconds, and I'll show you on the Discord because I was kind of giving updates as I was going through it. If I'm not mistaken, it might have been around the 23rd minute. I don't know if that's accurate or not, but he basically said the tariff impact seems to be bigger than our biggest financial model. All right. And it really was just that one sentence. But that's a loud sentence right there. All right. They make a whole mess of different financial models. All right. If scenario A happens, B, C, D, probably all the way to Z, right? Literally, their most extreme case model wasn't as severe of impacts as we're seeing today. That's what Powell just said. All right, he doesn't magnify how much. What was it? 1% more? Was it 50% more? Right? Like the magnitude of more is definitely unknown, but that was the guy's first moments of saying, oh man, I think we've seen some data, and I don't think it's as good as in fact, it's actually worse than the worst thing we were expecting. That's dumbed down what the guy said, right? And I was very much trading all of the mineral stocks, right? I was very heavy on TMC, knock on wood, in and out like a champion right there. Doesn't happen all the time, right? You know I'm not bragging about that, all right? USAR, man, real quick in and out. Like my swings aren't as long as they used to be, right? And again, I'll show you. It's also in the charts a little bit, right? But oh man, it's just it's getting rough even when the market was trying to do good, right? And now I think his sentence of data made things a lot worse. And that made me get ready. And it was also a short week last week. You know, I generally don't like short weeks, right? But when the data's first mentioned and it's bad, and it's as bad as he kind of hinted, I'm real worried for the FMOC call coming up on what, 15 days from now, right? So that was a little bit longer of a Powell rant. Truth be told, I've explained that to a few people in my life a few times, so I feel like I've like put that together a little bit like more cohesive in the last bit. But so that's moment one right here. I'm probably gonna chapter this right here, just Powell. So right here, I'm gonna say one thing, and it's gonna make a lot more sense on the charts. All right, when we look at the weekly chart on all three major indices, when we look at the NASDAQ weekly, when we look at the S&P 500 weekly, when we look at the Dow Jones weekly, and that obviously means QQQ, SPY, DIA, all that, right? We haven't lost the 200 moving average since 2008. All right, 2012 didn't lose it. 2019 during COVID didn't lose it. 2020 during the global shutdown of COVID didn't lose it. And really even 21, 22 when we were like kind of coming back, kind of like all of those didn't lose it, right? If this is the moment that we lose the 200 on the weekly, and I'm gonna be real honest, I kind of think we are. Oh man, I don't know what that impact's going to be because again, I was a nobody in 2008, right? I was just some kid. I was whatever my parents were deciding and doing is how I was living and going, right? So, it's just on like a world level. I have no idea, but to me, that is the most important like trigger, all right? And in my guess, we're going to know what's going to happen in about 2 weeks, all right? Just the last thing on that, Trump, and really this is not a bash on him or a like on him. You know I'm not here to talk about politics, right? Trump has the ability to do something like drastically immediately and sporadically in a lot of ways, right? So that makes this also that much of an interesting factor to trade, right? Like as much as I think things are going down, I am a little limited on how big a bet I want to make on that because the guy can say something tomorrow that none of us were expecting today, and all of a sudden everything flips, and you know what I mean? So there's pros and cons to that, right? But you gotta respect the spontaneity of what comes with everything. All right. So this was definitely a lot longer of a fireside chat that I wanted to do. All of these are just my personal thoughts, right? So I would love for you to not only disagree with me, but like have a conversation about why you do, right? But that's kind of everything I'm looking for. Real quick, my name is not Timothy Eberly. I'll give him credit for this picture. That for sure is not what I looked like when I was a baby. I can tell you that right there, all right? So I'm going to close that. This is my background. I love this thing. Let's come into the technicals now. So 1430 is where I will chapter this. We're looking at the SPY. Again, this is an identical chart to the S&P 500 itself, SPX. It's just basically a 10x difference, right? What are we looking for right now? Look, I could have started on the daily, but I wanted to come to the weekly. Look, this was the last thing I just mentioned on the last chapter. I'm not sure if you fast forwarded or not, all right? To me, it is all about the 200 moving average on the weekly chart. All right. As we zoom back and zoom back and zoom back and zoom back. All right. I'm obviously going to come back to this to look at it. 2008 was the time we lost the 200 moving average on the weekly. The purple line, we were over it and then it was gone. Basically, since this ETF came into inception, right? So that was the moment. We didn't lose it in 2012. There were some tests of it, and we can zoom in real quick just to look at it, right? But bad candle, none of those are confirmation. Bad candle, no confirmation. And obviously we came back up, right? So we lose it here. You can see all these confirmations. That for sure was confirmation, right? When we move into COVID, right? And again, to me, COVID's almost three parts. It's when we found out, and you can see when we found out, we basically come to it, right? When we global shutdown, we bad candle under, but no confirmation, and then quickly come back, right? Even here in that 2022 kind of aftermath of it, I don't even know what to call that, right? We come to the line, but we don't lose it. We really only lost it in 2008. Lo and behold, we're getting close to it. And I know we're actually not. I know we're way up here in the lines down there, but that was a scary candle a month ago, right? And Trump gives us a beautiful, again, if you're hoping for the good, right? A really good sporadic moment. He tells us 90-day pause. Markets are happy for the moment. It clearly wasn't enough. And, I'll get to the technical side of that shortly. But, it just, it makes me feel like red, 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 green, green, green has the potential to be red, 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 right? When you look at the daily, and I can talk about it on the weekly too, I'm still seeing a constant struggle with the 8 and the 20. 8 and the 20. 8 and the 20. 8 and the 20 and the 20, and right, like good things happen over the 8 and the 20, bad things happen underneath it, right? We are under the 8 and the 20 on the weekly, and all I'm seeing is you go away from the 8, you come to the 8, you go away from the 8, you come to the 8, you go away, come to it, and we're now going back away from the 8. You know what I mean? And what we did on the weekly of struggling with the 8 for a while before we just came to the 20 and then rejected it, that hasn't even happened here, right? So I see a prolonged struggle with the 20 that hasn't even happened here because, again, the daily is going to move 5 times faster than the weekly, right? It takes 5 daily candles before we get a single weekly candle here, right? So it was basically the last thing we talked about on the Discord. Someone said 840 and wow, dyslexic, 480 and 495 this week. I don't think it's this week. I think that's the next 2 weeks. And look, my lines are almost identical to that, right? I think on Friday, if I had to guess, we're probably going to come down to 498. And then next week, if nothing good happens, we're coming down to 480. That's kind of my guess right there for the next 2 weeks right there. And really, it does pretty much fall in line. His number is 495. Again, I'm not here for perfect. I'm here for good enough, right? So I think those two are pretty close to each other, all right? I saw some people getting excited about the recovery that we made during the day, right? Like, I don't know if you were watching the whole day, but I saw us come down to 500 single digit. 508 is the lowest, right? I think I saw 509. It looks like a good recovery. It does. But look, when I come into the 15-minute chart, and again, I live on the 15-minute chart a lot, right? I'm by no means am I saying it's the best. I'm just in a lot of work meetings, so I'm just very used to this chart. The RSI at the lowest point of the 15-minute chart, look in the box over there, was a 2.45. Before that, it was a 2.3. Before that, it was a 4. Before that, it was a 4. Before that, it was a 12, right? Like, this was a really low RSI. It very much makes sense to me that it's going to go up. There's definitely a good chance for red, red, red to be green, green, green. And hey, maybe, and I saw some people talking about 520 tomorrow. I could actually maybe see that hitting. I think, to me, the daily chart is not happy, right? I don't know if you've been watching my videos on the market, but one thing I talk about is the RSI goes really low, then it comes back to 50, then it comes back low. This one didn't even go up to 50. This one went to 44 at the peak if you're looking at the box over there, and seems like it's going to go back down, right? At the low, this thing went to 18. So truth be told, I'm kind of expecting the 38 to go to like maybe 20. I don't know if it's going to come just as low, but I think it'll get close to it. If it gets lower, that's going to be worrisome, right? Look, everything I just said on SPY is completely identical to QQQ. All right, I'll do it backwards. 15-minute RSI was crazy low. It for sure made sense to me that it had to go up. I can see it's coming all the way up to 440, give or take. I'm clicking out like 437. That said, I'm not liking the daily. I'm seeing it low. Even from, let's look at the hold down trend, right? Because it starts right here. You're really high, you come low, you try to come back up, you then go lower, you come back up. It's in healthy cool downs are what we talk about on the way up. Unhealthy cool ups are what we talking about on the way down, right? And all this thing's doing is failing the 8 and the 20, failing the 8 and the 20, right? When we come to the weekly, all we're doing is failing the 8. I'm really worried about this thing coming all the way down to the 200. And again, the last time we lost the 200 moving average on the weekly was '08, right? We actually don't even go below it in the 2020 scare that we saw in the S&P 500, right? So it is, and even all this, right? I know you see, look, bad candle, no confirmation. Bad candle, no confirmation. Maybe that little 1-2 right there should have been a little bit, but we never even go lower than the lowest point, right? So to me, in a lot of ways, yeah, we were definitely having some scary weeks, but we never big candle, bad confirmation, right? So, and really there was like a cluster, blah, blah, blah. We're talking about the now, right? I would be very worried. Look, I don't know why this line's blue. Let me at least just make it white. Give me a sec. That was an all-time high number at one point. I think 410 and 392 are the next lines down. Realistically, I should raise that to here. That's a little too low. We'll just take it to that. 419, 420, and then 392. I think those are the next 2 weeks for QQQ unless we see anything big. Dow Jones, look, I don't, what is it, DIA? Is that the ETF? Yeah, that's the Dow Jones Industrial. You can tell I barely look at this one. Again, exact same thoughts. 8 and the 20 fail. There was a little bit of a recovery today. RSI was really low. It happens right here. This recovery actually wasn't as pretty as the other ones. When you look at the weekly, it feels like we're going to be coming at 363. We don't even need to draw the line between it. And then again, look at this one, right? That was a scary one too. I'm surprised. This one did the confirmation. The other two didn't. That's actually interesting to see. You can tell how little I know the Dow Jones, but obviously they all had the '08 in common, right? So, yeah, look, it feels like we're coming to the 200 on these charts. Hopefully we don't lose it. All right. Very, very last thing. If you're still here, FOMCs in the next 15 days, right? I think at this point we're very highly unlikely to lower. We're pretty much going to stay. There was, again, it wasn't a wild, but there was almost a 1 in 4 chance that some people thought that this thing was going to reduce, right? So what was a 20% has now dropped to 11, and obviously that's gone up, right? So there's still a lot more hope than I was expecting for a rate drop in the summer. You can actually see it's 60% for a rather big drop, right? So I like the fact, and again, this is a free site. I'm not logged in. They don't have any information on me, not even my chart readers info, let alone my actual one, right? But Powell's comments were almost a week ago, right? The probabilities had more than enough time to adjust, and yeah, I like that. And as I go deeper, right, like there's still a lot of like good chances that things move, right? There's still 99% of an ease in September, right? 98% in July, right? Even 71 in June is a lot higher than I overall would have expected after what Powell said, right? So let's see what he says in 15 days, 16 days, give or take, right? Let's see what happens to these probabilities. But I think at the minimum, as angry as people were at what Powell said last week, for me, it was the guidance I needed to move from tickers to inverses. And it actually didn't mess up these longer term probabilities that we were expecting, right? Like there is still plenty of time for 3 rate drops like we were expecting during this year to happen. You know what I mean? So let me know your thoughts. Let me know your opinions, even if you disagree. Oh, I appreciate you so, so much.